Welcome back. In this session we're going to have a look at the different types of accounting that we can use, and then have a look at the various different users of those different types of accounts. Now, really there's two main types of accounting that we can go into when we look at recording business transactions, but also planning ahead in a business. There's two main types of accounting that we need to focus on, and that is management accounting and financial accounting. In this syllabus it's really important for us to distinguish between management and financial accounting, as they are two different types of accounting. We're going to start off with management accounting, and management accounting is really there to help managers do certain things, such as plan, control, and make decisions for a business. So management accounts are there and designed to help management plan, control, and make decisions in their business. Now, this is really what you have a look at in F2, the management accounting paper. So this is something that you'd focus on when you have a look at ACCA F2 rather than F3. Now, when we think about helping management plan activities in their business, and we need to quantify that financially, well, usually we have planning through preparing budgets. Okay, so as management accountants we could go and prepare budgets to help management and supervisors plan their business activities in the future. We could also help them to control their activities by preparing some sort of variance analysis. So what I mean by variance analysis is comparing the budgeted or planned results against the actual results of the business. And once we know that, we can help control our costs if they're exceeding the budget, or even help us control our revenue. Maybe we're not generating enough sales income as we would have liked. Well, the management can then look at that and decide how they're going to deal with that to help them control their costs and their revenues in their business. We can also do things to help them make decisions into the future. So we could help them with doing some sort of costing analysis, doing some reports, okay, for them. Okay, so we can help them do costings. We can help them, once we've done the costings, establish a selling price for the goods and do reports for them. Management accounts really can take any form. It's really there to help management do their job. Okay, so these are the typical things that you see as different types of management accounts. Now, the next thing we've got to ask ourselves is, well, how often do you think management would need budgets, variance analysis, reports, etc.? Well, the key answer to that is it depends. Okay, the frequency of accounts that are management accounts depends on the business. Could be daily, weekly, monthly, quarterly, half yearly, annually. It depends. It depends on the sort of business. It depends on what management need to help them plan, control and make decisions. So maybe you need to prepare a report showing the analysis of sales over the recent quarter. Fine, you can do that. But maybe one type of business needs a list of all their sales for a day, particularly if they are a large international business, let's say. So it really depends on the type of business, but most commonly management accounts are prepared monthly. But again, it really depends. It depends on when the business needs them, when the management need them. So then we've got to ask ourselves, well, is it required by the law to prepare management accounts, budgets and analysis? Well, the answer to that is no. There is no legal requirement to prepare management accounts. Why? Because they're prepared internally. They're never going to be seen by customers, suppliers, shareholders, etc. They are only going to be prepared for people internal to the business. So the users then will be largely internal users. And as the name suggests, usually it will be for management, supervisors, directors, middle management. Okay? And because it's kept internal, there is really no legal requirement to prepare them, nor is there any strict format. Again, it's very informal. Why? Because every business is different. And they will have different needs, different reporting needs, okay? Different information that they will need to help them make their plans, help them control and make their decisions. So, with management accounting, there's no set format, your users are internal, the frequency will be when the business needs them, and there is no legal requirement to prepare them. And in management accounting, you do that and use management accounting techniques in F2. So this is something that you will not learn how to do in this syllabus. Okay? What you will be required to do is distinguish between management accounting and financial accounting. So let's have a look at financial accounting. And guess what? This is what you will do in this paper in F3. So financial accounting, this is what you'll do in F3. Now financial accounting, as I already mentioned in the last video, is that we are looking at recording historical performance and financial position. So, historical record of performance and position, financial position. Okay. So remember, with financial accountants, we're very much backwards looking. If you contrast that to a management accountant, they're very forward thinking, planning into the future, using budgets. Okay? Whereas financial accountants, we've done the transactions, now we've got to record them and present all the transactions that happened in the year into the financial statements. That's what financial accounting is all about. So, how often would you need to prepare a historical record of performance and position? And remember, they would be summarised, remember, in your financial statements. So another way of putting the question is, well, how often do you have to prepare financial statements? Well, usually it's annually, once a year. That's the norm for preparing financial statements. They take a long time to prepare. You're collating a lot of transactions and summarising them into two documents. If you remember, the statement of comprehensive income to find profit or loss, and the statement of financial position to find the health of the business, their financial position. And that's quite a big job, so usually that gets done annually, once a year. We then have to ask ourselves, well, is there a legal requirement for a business to show a profit or loss in the year? Well, yes. In the UK, if you're a limited company, you have to prepare a set of financial statements as per the Companies Act. So usually, yes, there is a legal requirement to prepare your statement of comprehensive income and your statement of financial position. The format, okay? What is the format? Can we just do what we want with them? No. There is a set, prescribed format and that will be specified by local laws. So like I say, in the UK, the Companies Act specifies the layout of a company's financial statements, but also the format will also be prescribed by accounting standards. And these are rules set by the International Accounting Standards Board, which lays out the presentation of financial statements, amongst other things, including how we record transactions as well as presenting them as well. So we do have a set prescribed format. We can't just mix things around and put everything where we want them to go just because we feel like it. We have to have everything in a set order and valued in a set way. Now, the users of the financial accounts, well, if management accounts are mainly prepared for people internal to the business, well, the users of financial accounts will be mainly external users. Now think about what we're preparing. We're going to prepare a statement showing our profit or loss for the year, and we're also going to prepare a statement showing all our assets, what we own, and all the liabilities, what we owe. Remember, that's going to assess the health of the business, the position. So ask yourself this: who is going to be the most interested in their business's profit or loss in the year and their financial health? Pause the recording whilst you think about that. Try and think about different types of users that would want to know that sort of information. Well, hopefully you've thought of many. Now, the key user of the financial statements and who they used to be prepared for many years ago solely was, of course, the shareholders of the business, the people that put money into your business. Well, of course, they're going to be interested in your profitability because they would like a return on that through a dividend payment, but also your probability of survival in the future. Do you have enough assets to pay off your liabilities? Do you own enough things to pay off what you owe? Yeah? They would obviously be the most interested. So for things such as return on investment, and of course they want to know the profitability, because that would have an effect on a listed company's share price for sure. So there's other reasons, but they're the main ones. Other users, well, I like to think the government, the local authority in your jurisdiction would be quite interested in your profit or loss for the year. Now, why do you think that would be? Well, it begins with a T. Tax. They want to know how much to take from you through tax. So, of course, the local government would be interested in the business's profit or loss for the year, so then they know how much to tax you. There's other things, you know, the government might be interested to see, you know, your business's impact on the economy, particularly if it's a large business. So there's other reasons as well, but tax would be the main reason. Lending institution or lenders, banks, building societies, of course they're going to be interested. If you go to the bank and ask for a loan, they're going to ask for your financial statements to see whether you are suitable to be granted a loan. You know, can you meet the repayments? Do you have enough profitability in order to survive in the future? And the lender would get their money back eventually, plus interest. So yes, lending institutions would be a key example of a user of your financial statements. There's plenty others. Customers or suppliers. You know, your suppliers will be interested. You know, if you want to buy goods off them on credit and you want to promise to pay them later, they want to be able to make sure in themselves that you can pay later, you have enough cash and so on. Customers as well. You know, if the customers want to buy something off you and they put a deposit down and you're going to supply them with those goods in, I don't know, maybe 6 months' time, well, they want to be assured that you are going to be around in the next 6 months, that you are trading well, and that, again, you have enough cash balances and enough assets to meet your liabilities, and that your business is not going anywhere anytime soon. Lots of others, competitors, may be interested in your financial performance and position, so they can compare it against their own performance and position. And I suppose also management and employees. Although, yes, they are internal to the business, again, they might still be interested in the performance and position of your business. You know, are there any future job prospects? You know, is the business expanding? Are they very profitable? You know, am I going to get a bonus? You know, that sort of thing. Managers, employees, again, may well be interested. And although they're not external users, they still would may want to have a look at the financial statements. And then the only other thing I can think of really is the public. Okay. You know, again, the public, again, potential shareholders in the future, potential employees, they may be interested for one reason or another. Also, your business's impact on the economy, but also the environment. You know, financial reporting really has extended beyond the numbers, passed into the annual report as well. So looking at corporate social responsibility and things like that as well. Very much largely out of the remit of this syllabus, we're just focusing on the accounting side of things. But as you move up the ACCA qualification, you'll see things like corporate social responsibility, environmental reporting come into play a bit more. So there's various users that can use your financial statements, and that's what really we're going to focus on in this course. Financial accounting. Management accounting, leave that for F2. The reason why we talk about it in F3 is you could be asked to distinguish between financial and management accounting. And we've done our first chapter, so we'll end it there. Thank you.